This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Iraq produced 3.94 million barrels per day, BPD, of oil in September, less than its OPEC Plus output quota of about 4 million barrels of oil per day, an Iraqi official said on Saturday, as the country seeks to boost its compliance with the target. The production figure given by the official, who asked not to be named, contradicts the findings of a Reuters survey published on October 3, which found Iraq had pumped 90,000 barrels of oil per day more than the quota in September. Asked about the survey's findings, the official said production had come in below the quota due to lower exports, reduced domestic consumption and a decline in output from the Kurdistan region.
Oil prices on Monday wiped out nearly all gains made last week after data showed China's inflation rate declined and the lack of clarity on the country's economic stimulus plans stoked fears about fuel demand in the world's biggest crude importer. Brent crude futures fell $1 to $78.04 per barrel by 0649 GMT, while U.S. West Texas Intermediate crude futures also fell $1, or 1.3%, to $74.56 per barrel. Both benchmarks gave up all their gains from last week, falling by more than 1.5% a barrel earlier on Monday, before recovering some ground. Brent gained 99 cents last week, while WTI climbed $1.18.
Moving on to the top news in the energy sector.
China's coal imports reached a monthly record high in September, customs data showed on Monday, as international coal prices declined. September shipments were at 47.59 million metric tons, according to General Administration of Customs data, up 13% from a year earlier. Newcastle coal prices fell through most of September to as low as $136.46 per metric ton on September 23. That was down by 7% from August's high of $147.13 per ton, making imported coal more attractive relative to domestic supply.
Dutch and British wholesale gas prices edged higher on Monday morning as maintenance curbed supply from Norway and the market continued to be concerned over escalation to tensions in the Middle East. The benchmark front-month contract at the Dutch TTF hub edged up by 0.55 euro to 40.20 euros per megawatt-hour, MWH, or $12.87, MMBTU, by 0821 GMT, LSEG data showed. In the British market, the front-month contract inched up by 0.04 pence to 100.1 pence per therm. The British day-ahead contract was up 1.00 pence at 97.50p therm. Next, we have the top news in metal markets. China's iron ore imports in September rose 2.7% from August and climbed 2.9% from the year before, customs data showed on Monday, as bookings were encouraged by lower prices and hopes for improved demand during the peak construction season. China, the world's largest iron ore consumer, brought in 104.13 million metric tons of the key steelmaking ingredient last month, according to data from the General Administration of Customs. That beat analysts' forecasts of between 98 million and 103 million tons ahead of the data's release. The volume last month compared with 101.39 million tons in August and 101.18 million tons in the same month in 2023.
Gold prices steadied on Monday amid a risk-off mood driven by an underwhelming China fiscal stimulus, while investors awaited comments from U.S. Federal Reserve officials for hints on its interest rate outlook. Spot gold edged up 0.1% at $2,658.67 per ounce by 0944 GMT, after hitting its highest since October 4 at $2,666.72 earlier in the session. U.S. gold futures were flat at $2,676. Although moves are small, feels like a risk-off environment, with the white metals down and the yellow metal up, UBS analyst Giovanni Stornovo said.
We will now look at the top news in the agricultural sector.
China imported a near-record 11.37 million metric tons of soybeans in September, customs data showed on Monday, after imports hit a record high last month. Chinese traders have ramped up buying in recent months, taking advantage of a decline in global soybean prices and in anticipation of trade tensions with the U.S. possibly intensifying if Donald Trump returns as president following the election next month. In August, imports of the oilseed swelled to a record 12.14 million tons. The hefty September arrivals were up 59% from some 7.15 million tons of soybeans recorded a year ago, according to Reuters' calculations of customs data.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.